Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for June 10th, 2014. We're going to look at a very unique set of charts today. This is on one of my other platforms on bar chart. And what I've found over the years that when I look at the same chart pattern on different platforms, they sometimes look a little bit different. It gives me a better perspective on reading the depth of the market and what I think might be going on in my predictions and my forecasts. So I'd like to show you this particular format tonight. So you all are somewhat familiar, with this with bar charts. I do post a similar bar chart patterns time to time on StockTwits, as well as on my service. But this is the first time that I'm actually doing this extensively for the end of the day report. So saying all that, let's get straight to the action. There are three aspects to this thing that I'd like to concentrate on. One is the basic stochastics. These are the fast stochastics when we're looking at a very fast market here. So I'm just looking at the fast stochastics, and very simply, for all the new traders and stuff, this is a little bit educational, and I try to be the best that I can. This is overbought levels up here, up above the 74 level, or so, as you can see. And this is the oversold conditions, where we generally get below, let's say, 30. Okay, below this white line would be very extreme oversold. Above this white line is we're getting extreme overbought. Okay, these are all short-term charts. However, I'll be showing a weekly version of this tonight. Volume, standard stuff, and here are a couple of things that you need to concentrate on. I overlay the pivot lines. You want to know the definition of a pivot? Please Google it. And basically, it's a technical analysis indicator, and I'm reading this off for a definition standpoint, used to determine the overall trend of the market over different time frames. The pivot point, as we all know, is simply the average of the high, low, and closing prices from the previous trading day. So it's a bit like the moving average, except these are levels that we're talking about. On the subsequent day, trading above the pivot point is thought to indicate ongoing bullish sentiment, while trading below the pivot point indicates bearish sentiment. Now, saying all that, there's no steadfast rule, but a lot of technical traders follow pivot points, and I just thought I'd overlay them up here. And as you can clearly see, they're highlighted here on the right side in red. For example, this pivot point was 189.75. It's right there. I'm sorry, 189.63, as you can see. And then the upper pivot points, the green lines, you can clearly see what they are. The 195.60. This is on the SPY, obviously, the spiders, S&P 500 spiders. And then it goes all the way to 2000, or in this case 200.01. So please focus on that, and you can start to see what I'm talking about. So let's take a look at a couple of other things here. This dotted line, very important, is the 34 day moving average, in this case 34-week moving average. And then this red line, which is very important, is the 50-week moving average. I'm looking at weekly charts here, so basically that's what I'm focusing on right now. All right. So let's take a look at what's going on with the SPY. On a weekly basis, we are looking at the spiders of the S&P 500. Everyone keeps on asking how far can the market go. We're starting to reach some pretty critical overbought levels. The stretch goes on probably for a couple of days, corrects, and I still believe we have a sharp move up at the end of June, where the second quarter portfolio balancing to window dress the portfolios. And please Google these terms so you know what I'm talking about, where portfolio managers want to show some some of the high beta charts, some of the high moving growth stocks inside the portfolio, so to buy those at the end of the month. And in this particular case, more important, because Q2, second quarter 2014, I believe, will be quite in the green and in the black, I should say, and should show some strong numbers, unlike the first quarter. So here we are, pretty overbought. We probably have a quick correction down here where the indicators reset themselves. Standard procedure. Just look at these patterns here. We had the overbought situation here, and then it kept on continuing, as you can see, for a couple of days, and then bang, dropped hard. Okay, and that was back in February, which was a great buying point, by the way. And I did highlight that at that time. I was posting stuff on StockTwits a lot, so you can go back and see what I was doing at that time. And then another sharp correction here in April 15th level. This is the weekly chart, and that's when I launched my service on tax day, and you can clearly see that was another great buying point. And then we had another mini pullback here on May 15th, this red bar, and again another solid buying point, which we took advantage of. Now we're up here, sliding up the Bollinger Bands. These orange lines are the Bollinger Bands, and it looks like we might very well get towards the 1960 level, but we're getting close here. So saying all that, let's move on to the next chart. So anyway, these are very simple ways of reading the market. You look at the stochastics, you look to see where they get oversold, you wait a day or two and you buy it, and you make a decent sum of money. It's not always that easy because algorithms, algo programs, and high frequency trading programs, HFT as I call them, they tend to skew a very large, and confuse a large number of traders and market participants by their very highly erratic and volatile maneuvers, and that's just what they're designed to do. They're designed to throw you off the boat before they take off, or designed to keep you on the boat while they're going down. So let's look at the next chart here, if I can get to it. There we go. So the next one is the IWN, my favorite Russell 2000 index ETF. And we're seeing a very interesting pattern here. Look at these pivot points here. You can read the green lines. The next, we're right here at one of them at 117.69. And then we have the top of the Bollinger, which is the blue line, at 119.55, which correlates with roughly about 1190 or so on the Russell 2000. So again, I still think we have some room to move up. We are starting to see, let me just set this up. I guess I didn't do it right. Shouldn't say that I did it right, but I just didn't. Bar settings to bear with me 1 second, and we are going to do this right. I'm a big believer in the 1534. There's the 50-day and the 34. There we go. 54 and the 30-day crossovers and things like that. 34-day crossovers, very important. We can clearly see here the 50-day still trailing up. The 34 is doing well, and we are. It still looks like we have some room to move. The upper Bollinger is a 119.71, and that's for IWM players, and as we know, we participate in that quite a bit. We are quite overbought here at this level, so a minor reset is very possible this week. However, these things happen rather quickly, so keep it in mind. These were the real buying points down here. For example, this is being a weekly chart. You can see in the middle of April, when we launched our site. Obviously that was the time to really go in hard, and we certainly did. Let's look at the next one, which is the QQQ, and that's for the NASDAQ. And take a look at the QQQ technology heavy ETF, and you can clearly see where we are here. This is still looking like it wants to slide a little bit up this way. So what it's telling us, we still have a little bit more room to move, and we probably move into the next pivot point. You can see that it's highlighted here as somewhere in the 94 level. Okay, if somebody wants to be specific, what it's telling us, we still have a little bit room to maneuver up, and if something and I believe that this is very similar to what happened here. And you can clearly see that we kept up for a bunch of days, and then we had a nice little pullback. So the 34-week moving average should act as support, but that's, however, a very low support. That's a pretty sharp drop there. I still think that we probably hold on to the middle of the Bollinger, which is around 89. Anyway, without getting too technical, we are quite overbought, but we still have some room to move. This blue line here, which is the stochastic percentage D, that is looking like it still wants to go higher. So we still have a little bit more room to go in the Nasdaq, and we can clearly see that with the behavior of some of the stocks that we're going to look at tonight. Let's look at the biotech index, where a lot of the action is based on. This is a beautiful chart. We have a significant recovery from the lows. I've been highlighting this all the way from, coincidentally, April 15th. And you can clearly see that there was not a single soul in sight who was saying buy the biotech index. All they talked about was this thing is finished and blah blah blah. The same old story you keep on hearing on the media, the investment gurus, and pretty much everyone. At this point in time, I don't hear any really bullish optimism on the biotech index, but some huge number of mergers and acquisitions, M&A activity in that particular sector is really juicing up the ETF here. So saying all that, you can clearly see I had mentioned this before, so I highlight it again. Looks like we're going to move up towards the 254 level. It really doesn't mean anything to anyone, but it's telling us that it wants to still go higher. See the pattern on this particular stochastic? It's not looking like it wants to turn around immediately. It will happen. However, don't try to be too eager to go ahead and short this that quickly. This is a daily. Let me look at a weekly, and the weekly is telling us that it definitely wants to. I shouldn't say definitely, but it definitely it wants to go higher, probably towards the 260 level. Pattern symmetry, right? You see this? Start studying pattern symmetry over for a period of time, and you start to see these patterns repeat themselves, just the way it happens. If it does go to the top of the Bollinger, it's 270, and of course we were here calling people to buy the index or buy the individual stocks within the index back in the middle of April. So that's a little feather in my cap on that particular instance. So saying all that, this is still a very powerful move up on the stochastics. It will start to curl back a little bit down. However, that probably won't happen for a couple of days. Probably not till the first week in July, as I've been saying. So that's a reasonably good rundown on the index, and we'll cover stocks in a bit. Thank you for listening.